Hello, everybody. Welcome. Let me know how the audio quality is when you get a chance, please, on X and on YouTube. Let's get started. Tesla stock is flat today at about $290 per share. SMCI down 12%, Nvidia down 3%. Oxy, the long position I added yesterday, is up 1% today. Dow Jones up 0.7%, Nasdaq down 0.5, S&P 500 is flat. Russell 2000 is down slightly. Most of the action today is in Nvidia. Broadcom is also down a couple percent. All the chip stocks are down today. Google is down 1%, Meta is down 1, Amazon, Tesla down slightly. Oil stocks are up. Financial sector is up across the board today. Financial sector is up across the board today. There might be some sort of sector related news. I'm not sure why that would be the case otherwise. All right, we're going to read a couple of articles. Let's see if Lucia has any comments on NVIDIA after that. And please let me know if the audio quality is good on X and on YouTube. All right, let's get started. I published my new NVIDIA article. It's at the top of our screens. It just got published, fresh off the press 5 minutes ago. I would highly encourage you to read it. And if you could please give it a like and repost the tweet at the top, it would really help me out. Thank you very much. All right, let's get started. Give me one. Lucia, how are you?
All good, Yaman. How are you?
Do you mind if we read this first, or do you want to talk about NVIDIA first?
As you wish, Yaman. You are the host.
Okay, so let's read this first as a general overview as people get settled in, and now we can talk about NVIDIA a little bit more. ECB's multi-trillion-dollar euro payment system suffers outage. The European Central Bank was scrambling to fix a rare outage in its payment system, which left transactions likely worth trillions of euros from companies, consumers, and investors up in the air on Thursday. The malfunction of the Target 2 system used to settle more than 3 trillion euros of daily payments and financial trades meant transactions between banks could not go through. While the interruption would not be felt immediately by regular bank customers, that could change the longer the outage continues. The ECB said in a statement to Reuters the unprecedented issue had been caused by a hardware defect and there was no malicious or foul play. Okay, that's good enough for that article. There's a Yahoo Finance article about Trump tariffs. Let's look at that real quick. President Trump said Thursday that tariffs on Canada and Mexican imports would move forward on March 4th and that he would add an additional 10% levy on China, heightening the stakes of his trade battle that has rattled Wall Street and injected an air of uncertainty during his first weeks in office. I don't think it's going to happen. I don't think he's going to do any of this stuff. I think that it might crash markets, and he obviously pays a lot of attention to the stock market, and it's just not going to happen. On February 27th, this morning, he posted on his social media platform. Drugs are still pouring into the country from Mexico and Canada at very high and unacceptable levels. A large percentage of these drugs, much of them in the form of fentanyl, are made in and supplied by China. More than 100,000 people died last year due to the distribution of these dangerous and highly addictive poisons. Millions of people have died over the last 2 decades. The families and the victims are devastated and in many instances virtually destroyed. We cannot allow this scourge to continue harm to the U.S. and therefore until it stops the serious the proposed tariffs scheduled to go into effect March 4th will indeed go into effect as scheduled. China will likewise change and charge an additional 10% tariffs on that date. The April 2nd reciprocal tariff date will remain in full force and effect. Thank you for your attention. Okay. Big talk. It might rattle markets over the weekend, but I don't think it's going to happen, honestly. Just the wolf cried way too many times. President Donald Trump said Thursday that tariffs on Canadian export, blah, blah, blah. In a post to social, we talked about that. His comments appear to clarify remarks he made on Wednesday afternoon during a cabinet meeting, during which Trump suggested the tariffs on Mexico and China would begin in April. His latest post reiterates that the levies are scheduled to be implemented in the coming days. Trump tariff threats had weighed down the public sentiment. Consumers increasingly see that coming tariffs could lead to higher prices as suppliers pass on the cost of levies to American shoppers. Two recent consumer sentiment surveys showed the souring outlook. In turn, Wall Street had pulled back, delivering a batch of down days, blah, blah, blah. Trump style negotiating, etc. In recent weeks, investors offered a immediate reaction. Okay, and duties were originally scheduled to take effect, etc. Okay, nothing new there. There's gonna be something about banks. I don't know why the banks are up so much today. It's across the board. All bank and financial sectors up today. All right, we'll dig into that. We'll find out. If anyone knows in the replies, please let me know. If on YouTube, please let me know if you know what's going on with banks today. If you could please repost the article at the top of our screens, I would appreciate it. Thank you. All right, let's dig into yeah, interesting. No news. All right, Luce, let's talk about NVIDIA. Let's start with NVIDIA. What did you think of the earnings?
I think the earnings were, personally, I think they were not so bad, but considering all the expectative the market has on Nvidia and AI in general, obviously disappointed a little bit, which is something that I thought would happen. I think it happened exactly as I thought. What do you think, Yaman? Did you
Well,
expect
I
those
published an
results?
article and I share my thoughts in the article. In essence, the outlook margin was lower than expected and even lower than what I had expected in my previous DCF forecast. So I have a DCF forecast in an article at the top of our screens and a link to the one before. I actually published both of them in this article. And the the actual numbers came in exactly as I expected, both on the revenue and the gross margin side. Exactly, like spot on. And then next quarter's forecast, my forecast versus the outlook. My forecast was actually better than what the outlook they gave. So the margin outlook was bad. It was 1 to 2% worse than I had expected. So in this article, I make that revision. And then the revenue growth that they forecasted for next quarter is also materially lower than what I had incorporated into my forecast. So I lowered it as well and lowered the forecast revenue growth assumptions for the subsequent quarters as well. So that brought the intrinsic value estimate from 2 trillion to 1.9 trillion. And the stock was at 3.2 after hours yesterday. The stock was up like 3% this morning. And when and then the article got published. So it's a 40% drop from this morning's price. I expect 1.9 trillion versus the current. Now it's 3.1. Earlier today was 3.2 trillion that market cap. Luce?
So regarding margins, I think Nvidia margins obviously are declining, but I think also that their forecast is not totally sincere. If you follow the TSMC, Intel, if you follow the semiconductor manufacturing in general, you know that TSMC is facing rising costs for the manufacturing of chips, and it's soon going to start charging more. And not only that, with tariffs in play, might impact margins way more than what is being forecasted by NVIDIA. I think those margins are very suspicious to me.
Yeah, I agree. I actually recommend a buy, I think, on TSMC or maybe a hold on TSMC. Let me see my last article I wrote on Seeking Alpha for TSMC here. Because that is the company to invest in, I think, in the sector. And that's what Warren Buffett invested in before and everything, and it's so obvious. I mean, they have the power. There's obviously a risk of geopolitics with that company, TSMC, China goes to Taiwan, etc. But I think the probability of this is unlikely, and it's just you know the fact that TSMC can raise prices without Nvidia having a say in it is it just kind of tells you where the power is. I should probably update that article actually. Yeah, I have a hold on the stock on TSM. I'll probably keep that. The stock, since I published my article about a year ago, TSM risen 39% versus the S&P 500 increase of 16%. So TSM, 2.5 times more increase on TSMC stock since I published the hold. So that's a big rise. That's where the value is. That during that time, Nvidia stock basically was flat. So, you know, Lucia.
The risk of TSMC also lies in the loss of the technological leadership to Intel. Even if Intel is facing challenges and is definitely a bet that they can spin the foundries in the USA positive, but technologically wise, I think Intel is ahead of TSMC going forward. And so this is a consideration people need to make when investing in TSMC, other than tariffs and geopolitical risks. So it's not so clear to me that TSMC is a buy, but the PE ratio is definitely very, very good. So I think might be a good buy, but you need to be very careful.
Yeah, the only long I have right now is Oxy Petroleum. And, I think it's a good company, cheap, oil prices are low. So, man, I'm looking at these replies in the article. So when I publish an article on Seeking Alpha, I get a ton of replies right away. And everybody is just like hating on me. It's crazy. Everybody's hating on me on the replies. Look, let me read you a couple of the replies in my Seeking Alpha article right now. We just got published about 10 minutes ago. Um, you are clueless, value analyst. You have to be nuts to sell. This is the second comment. The third one, I like jokes masquerading as articles. That's actually pretty funny. Um, it's so funny. And by the way, like I've noticed that these people don't even read the article; they just kind of read the headline and the summary points and go straight to the replies. Analyst estimates are just guesses, then they behave negatively when their guess was wrong. I always take a company's projection with a grain of salt, but I trust the company more than I do the analyst who does not work there or just throwing numbers against the wall. Okay, let's see. Um, Anything new with Intel, Lucia?
Yes, Intel today has a closed door conference, probably with the biggest shareholders. Unfortunately, us retail cannot have information on that. Maybe there will be posted something afterwards. But there is a conference regarding the foundries business, how it's going to be managed going forward. And I think many are hoping for maybe information on future partnerships or maybe clues on if it's going to be bought out or something like that. So I think today there is some speculation going on in the Intel stock and Intel in general.
Okay. What percent of your portfolio does your Intel stock? And you don't have to share this information if you don't wish to. Intel is up 3.5% today, down about 6% in the last 5 days. In the past month, up about 20%. What percent of your portfolio is in Intel?
I would prefer to not answer that, Yaman.
Yeah, that's okay. Um, yeah, I mean, the stock moved 20% in the last month. In this before that, it was flat for about 5 6 months, and then in the last year, down about 43%. No earnings, $100 billion market cap, dividend yield of 2%. I don't know. I mean, can you convince me why? Why do you think, like, first of all, what's your view on Boeing? Do you think it's going to survive? Do you think it's going to thrive, or do you think it's going to go bankrupt?
I don't know Boeing, Yaman.
Okay. Um, well, they have their quality issues. In some ways, they're competing against SpaceX. When I think of Boeing, I think of a company that is very kind of like big and bulky, and it's not going. You're not going to get any innovation. They've been doing the same thing. There's a lot of hands in the jar and some political support for it, but it's not going to go anywhere. So it's not really a company I would ever invest in, honestly. Maybe it's a short term trade or something, but I think of Intel the same way. I think of Intel as a company that has been that had its best days in the past, and I just don't know how they turned this big ship around. But so why can you convince me why Intel is a better, like, why I shouldn't put Intel in the same bucket as Boeing?
Yaman, Intel, technologically wise, as I said, is leaping TSMC, and it's not even close. Their new process node 18A not only incorporates gates all around for transistor, which is a very big improvement compared to FinFET, which was the previous technology, and it's not only using TSMC, but they are also using a technology called backside delivery, which truly improves performance and efficiency. And so, when your perception that Intel is not innovating is wrong, honestly, Yaman. If you look at Intel and what they have been doing, you will soon recognize that this company, in fact, is not. It's probably in fabs. It's probably the leading tech. Is leading technologically. The problem with Intel is that and also their products they latest products are amazing, like products wise they basically are now, in my opinion, positioned better than AMD. The problem of Intel is that huge bet on foundries that is really draining all the earnings, all the profitability from the company, and is a bet is a colossal bet because foundries have never been positive by themselves for Intel. And not only that, if you look at TSMC, what TSMC has been able to achieve in Taiwan with the subsidies of their government, you see that Intel has to compete with TSMC, which is incredible. And so, can Intel achieve the same level of the same margins or even close margins to TSMC? Um, it's a huge bet. Also because producing chips in the USA, as things are right now, cost almost double than in Taiwan. Those are the real question. Can Intel have profitable foundries in the USA? Because if they can, then Intel is worth 10 times what it's worth now. And even without the fabs, the design part of the business, it's worth probably $40 or more. And so all comes down to this bet on foundries, because technologically wise, Yaman, if you look into Intel and what they are achieving, you will soon realize that they are innovating at a crazy pace. The problem is the capex that has been used to innovate at this speed, and the fact that there is much pressure, in fact, on earnings and on foundries, and it's a huge bet overall. And that's the problem, not the technology. I think overall, as I said, Intel has a margin of safety, because even if they sell the foundries to whoever, the the product design business itself is more valuable than the current evaluation. Okay, and so basically, if you invest in Intel, you can, generally speaking and logically speaking, you can only gain. But it might be a long fight, and if Intel, as they are right now, they are very dedicated to fabs, then you also need to be prepared to pain if they want to keep continuing on that road.
Thank you, Lucia. Let me read an excerpt. Intel has been actively advancing in semiconductor manufacturing technologies to regain industry leadership. A significant development is the deployment of ASML Holdings' high numerical aperture lithography machines in Intel's production lines. These cutting-edge machines have demonstrated promising reliability, producing 30,000 wafers in a single quarter. They streamline chip fabrication by reducing the number of exposures and processing steps, thereby enhancing efficiency and cost effectiveness. Intel is currently testing these high NA tools with its 18A manufacturing technology and plans to fully integrate them into its future 14A technology. Luce?
Yeah, so those machines are incredible. So first of all, as you read, they are able to push the more low forward, and to produce low nanometers nodes, which is incredible. So the point is that Intel is way ahead of TSMC also in that. You consider that Intel bought those machines starting in 2023. They bought them so early that ASML had to basically assemble them directly in Intel without testing for how early they were. And it's paying out. In fact, they are using them right now for research and development. And those machines are also being used for 14A, which is the node after 18A and 18AP. Okay, then there is 14A, which is going to be produced in Ohio in the fab called Ohio 1, Intel 1, which is a gigantic fab, big as four of the current fabs that Intel has, like Fab 52 in Arizona or Fab 42 in Ireland. So it's a gigantic fabs with this incredible technology, which is going to come online in 2027. And so, as I said, the problem is not the technology, because the technology is incredible, Yaman. The technology is incredible. The problem is, can they make it profitable? Because if they can't, they spent tens of billions of dollars, probably hundreds of billions of dollars for those fabs. And if they are not profitable, it's a mess. It's a disaster. Even if they can sell them off, that's the huge bet of Intel. They think they can, because otherwise they wouldn't have done that. And TSMC is behind, technologically wise.
Okay, let me continue reading this real quick. The 18A process, representing a 1.8 nanometer node, is poised to be Intel's most advanced manufacturing technology. It aims to deliver up to 15% improvement in performance per watt and 30% increase in density compared to the Intel 3 process. The advancement is expected to position Intel competitively with industry leaders like TSMC. In a strategic move to enhance its founder services, Intel has expanded its collaboration with Amazon Web Services. This multi-year, multi-billion-dollar agreement involves producing custom chips for AWS using Intel's forthcoming 18A process. Additionally, Intel has restructured its founder division into a separate subsidiary, aiming to attract external customers and optimize capital structure. Despite these advancements, Intel has faced challenges in recent years, including production delays and strategic missteps. The company is undergoing a comprehensive turnaround plan, which includes leadership changes, workforce reductions, and re-evaluations of its manufacturing strategies. These efforts underscore Intel's commitment to overcoming past hurdles, re-establishing its position at the forefront of semiconductor innovation. Intel's attempt to leapfrog TSMC in several ways, primarily through advanced manufacturing process, new lithography technology, and aggressive roadmap. Here's how. High NA EUV lithography, game changer. Intel is the first company to deploy ASML's high numerical aperture, high NA EUV lithography machines in production. High NA EUV significantly improves resolution, enabling denser and more power-efficient transistors. TSMC is not expected to use high NA EUV until 2030, giving Intel a multi-year head start. 18A process is ahead of TSMC's N2. Intel's 18A process expected in 2025 with ribbon FET next-gen transistors via and power via backside power delivery. TSMC's 2NM will not have backside power delivery initially, while Intel's NAA 18A will boost in efficiency and performance. Backside power delivery, power via. Power via moves power rails to the back of the wafer, reducing resistance and boosting performance. Intel is the first to introduce this tech in high volume manufacturing ahead of TSMC and Samsung. Expanding foundry business and AWS partnership. Intel signed a multi-billion-dollar deal with AWS to produce custom chips on Intel 18A. Intel's separate foundry division, IFS, is now competing with TSMC directly. TSMC has a strong lead, but mainly relies on external customers, while Intel can both manufacture in-house and attract external business. Interesting. Aggressive roadmap. 4 nodes in 5 years. Intel's 4 nodes in 5 years strategy aims to outpace TSMC's traditional 2-year node cadence. Intel 7, 2023, Intel 4, 2024, Intel 3, late 2024, Intel 28, early 2025, next-gen ribbon FET transistors ahead of TSMC's N2. Intel 18A, late 2025, aims to outperform TSMC N2. Key takeaways. Intel is betting on high-NA EUV and power via to gain an edge over its TSMC. If Intel 18A delivers its promise, it could surpass TSMC N2 in both performance and efficiency. Intel's foundry model is gaining traction with major cloud customers like AWS, shifting some demand away from TSMC. If Intel executes flawlessly, it could reclaim process leadership for TSMC by 2025, 2026. The big question is whether Intel can deliver on time, something it has struggled with in the past, but the pieces are in place for potential leapfrog moments. Okay, Lucia. That all makes sense. Let me.
So another
take
big
some.
question, Yaman. Oh, sorry.
Yeah, I'm just going to take some notes here. Go ahead.
So another big question for a long time was the yields on this 18A node, because as you read, it involves two new technologies, backside power delivery and gate all around. And so it was a huge bet, and it was a big risk. But at this point, Yaman, we have had many conferences. We had journalists that were under NDA confirming the fact that the yields are following industry standards curves and are in a good place. That was another big bet that I think it's paying off. I think I'm almost sure that that's not a risk anymore. And that's huge because you might think that the N2 node from TSMC has good yields because TSMC has always had good yields. But I can assure you that it's not a good assumption because there are many clues that in fact TSMC is struggling with those yields. I can basically, for example, show you this. Let me see. I will find it very soon, very quickly. Wait a second.
Take your time.
Wait. There you go. So when talking about yields, those companies have this chip. It's called that. So if you really want to understand the yields of a process node, the company has to disclose the D0 yield, which is basically the defects for centimeter square. Okay. But TSMC has not done that for N2. And in fact, it has disclosed only the yield of a 256 megabyte yield of of a different kind of is a different kind of form factor, which is totally not indicative. But if we look back in time, those same form factors yields probably in TSMC is 16 months from achieving good yields starting from December 2024. And this is the post where you can read that for yourself if you want to. I posted it in the comments. And so
Thank you.
obviously it's all speculation, Yaman. There is not a definitive proof that Enchu is struggling with yields. But if I follow everything of this stuff, everything, and if I had to bet, I would bet that 18A is on track and Enchu is having problems for everything I've seen.
Okay, thank you, Chip. I'm going to take a look at this. Yeah, I'm going to take a look at this. Thank you so much. August 2025, 2022, 80%, 250 MB yield, N3E, second gen N3. April 25, 2023, 55% yield. Hmm.
I know it's not easy to read, right? It's not easy to read, but basically what he's saying is that in 2022, the N3E node from TSMC took several months from August to January 24 to achieve to improve yields 5% per quarter, up to 70%, which is a good yield by January 24. And in 16 months took 16 months. And then by the same logic, in 2024 showed 80% yield on this form factor. And so it's going to take, assuming the same logic, 16 months as well. And so it's going to be ready 2026, in the mid 2026, going for this logic. And this is the only real clue I have on the yields of N2. I don't know if there is anything else other than this.
Thank you. But you're not making the claim that TSMC will never get there. You're making the claim that TSMC will be maybe a year or 2 years behind Intel. Is that correct?
So N2 is going to come out, let's say 1 year after, and it's going to be worse. And the time it's going to be, in the time it's going to be released, Intel has planned 18AP, which is going to totally leap N2. And then 1 year after, we have 14A, the node on those high-NA machines from ASML, and then it's over. Because I don't know if TSMC has a roadmap, a technological roadmap that can compete with that. And so I would say that right now Intel is totally leaping TSMC.
Yeah. Yeah, what I noticed in the semiconductor industry and across investors in the semiconductor industry, there is way too much emphasis on who is leading, in my opinion. I may be wrong. Maybe you're right. Maybe Intel will become the $1 trillion company and TSMC is 800 billion. I think they're $800 billion market cap right now. Am I right? And maybe TSMC will kind of like go back and whatever, um, but it's just that I think if company A on any given situation, if company A is just 1 year ahead of company B, and this could even apply to FSD, if Waymo is 1 year, if FSD, let's say to 100,000 robotaxis, if FSD is 1 year ahead of Waymo, that doesn't mean much from an investment perspective because eventually Waymo will get there a year or 2 years later, whatever it takes. And FSD will not be able to charge economic profits. And you're going to end up with a situation where people pile into NVIDIA stock looking at these overstated earnings power for a year or two. And they're going to be pointing to low PE ratios, comforting themselves that they are, they've become a value investor, not realizing that the earnings are not durable. So that durable competitive advantage is very rare to come by. And even if we assume Intel leapfrogs TSMC, That's not the end of the story for a good investment. The investment has to say something like, this thesis has to say TSMC will not be able to replicate what Intel is doing ever, or at least for the foreseeable future. And I don't, like, so far what you told me about Intel and TSMC, I can't really reach that conclusion. So I mean, I don't know. Go ahead.
But Intel produces on those nodes and will produce the best products that competes with AMD and also design and all the design companies that use TSMC. So if they want competitive products, they need to use the leading edge process, which Intel has. Otherwise, Intel is going to win anyway because it's the only one producing products on those anyway. So another thing that is interesting is that by 2027, the foundries are planned to break even just by internal production of Intel. That's very interesting. And so even if people don't really care or don't are not customers of Intel foundries, Intel thinks they can make it on their own on that part. So, but I agree, Yaman. It's not. It's a bet, and nothing is sure. I agree.
All right, thank you, Luce. Okay, I'm going to take a look at it. I'm going to write an article about TSMC versus Intel and dig a little deeper into it, and then we can continue after that. Luce, go ahead.
Okay, just to add to that, I wanted to also say a winner, like a winner between Intel and TSMC competition, which is ASML. Yaman, you just read of those high-NA machines, and ASML it's finally seeing very good sales of those machines, which are extremely profitable. ASML right now has gone down quite a bit, and it's the company I bought in this dip. I bought ASML, and not only Intel has provided enough evidence that those machines are useful and are the future. Now there is a huge competition between TSMC and Intel to have those machines as well. I think it's very bullish.
Got it. So your two horses in the game are Intel and ASML. Thank you very much. Um, I'll throw that company in the article as well. Okay. All right, let's look at a couple of things. Teleflex went down 22%, SMCI down 12%. We talked about in yesterday's space how it might be a short opportunity, but the stock is already down 12% the very next day. eBay is down 6% today. There's some issues going on with eBay, I think. I'm going to take a look at that a little bit because of possible macro implications. Vistra, utilities companies down 9%. Yeah, it's really interesting. These like utility companies are plunging. SMCI is plunging, but Nvidia is elevated still, or levitating, let's say. The yield curve is down about 4 or 5 basis points today. It's stunning. 10-year treasury yield is at 4.30. It was close to 5% just a few months ago. The GDP second estimate for Q4 came in at, as expected, 2.3%. GDP deflator second estimate was revised up to 2.4% for Q4 versus expected 2.2%. I want to take a closer look at that. Initial claims came in at 242,000, 22,000 more than expected, so 10% more than expected. So we have talked about in this space how I'm seeing early indications that initial claims might be going up. And today we saw a 22,000, a 10% jump versus expected and versus prior week's reading. So that would be in line with my thesis, but I'm not yet convinced that this is it. And I'm going to want to see another week or two of something like this because I need to kind of take a closer look at that report. People are blaming seasonal adjustment, that people look at the not seasonal adjustment number and they're like, oh, not seasonal adjustment numbers, it's flat. But the seasonal, well, there's a reason why these numbers are seasonally adjusted. So it makes no sense to me to ignore the seasonal adjustment. Continuing claims were low. I mean, not low, but stable at 1.9 million. But that's 1 week lag. So there's going to be a jump on that one next week, I think. Durable orders were up 3.1%, but durable orders ex transportation for January came in at 0.0, flat, and lower than the expected 0.4% and lower than the prior 0.1%. So that would be in line with a slowdown in the GDP growth in January. And potentially, I'm seeing some indications that February, the economy has slowed down even further with some of the early indications I watch, especially in discretionary spending in February. Oil prices are up today, back above $70 per barrel, and they seem pretty stable around there. Euro dollar is at 1.04. Let's see what else. What else is new? Okay. I want to. Sorry, I want to look at the um, eBay earnings real quick. Let's read one of the headlines here. eBay stock sinks on soft revenue, gross merchandise volume outlook. So again, this is yet one more data point that there is some spending slowdown going on in the economy right now. These are early indications of a possible recession. So I'm not ready to yet call. I think the recession is starting. I think the recession is kind of like starting January, February. We're on a brink. Like things can go south real quick here. But I'm not certain yet. Like I haven't yet seen. These are early indications. These are not concurrent indications. So let me just read that article real quick. Shares of eBay fell more than 5% Thursday, a day after e-commerce marketplace issued a current quarter revenue and gross merchandise volume outlook weaker than analysts anticipated. The San Jose, California-based firm reported fourth quarter adjusted earnings per share of $1.25 ahead of analyst consensus complied, blah, blah, blah. Revenue rose less than 1%, in line with expectations. Okay. CFO says, challenged macro environment continues. For the first quarter, eBay expects to generate revenue of 2.52 billion to 2.56 billion, below analyst projections of 2.6 billion. Okay. So Walmart did the same thing, I think, if I remember correctly. And we've also seen a couple other kind of forecast outlooks weaker than expected. But again, these are one-offs, anecdotal. It could be company issue, but if as they accumulate, then the signal becomes a little stronger. And initial weaker claims are kind of like the concurrent indicator of a major slowdown or a possible recession, and they ticked up today. But that indicator can be volatile. So let's give it another week or two, and by mid-March we should have a better idea of this. One area of kind of strength I'm seeing right now is used car market. Used car market has kind of ticked up a little bit in the last few weeks here. So, and also the housing sector was weakening, but there is a bit of a kind of indications that demand might be ticking up in the last week or two here for housing. So that's something to keep an eye on too as well. But like the housing looked like it was going to fall off a cliff, but then the mortgage rates came down from 7.5 to now I think about 6.8 in the last few months. Let me just take a look at that. I don't want to misquote something here. 30-year mortgage. So this is 30-year fixed mortgage average in the US in the last 1 year. They were above 7 back in mid-January, and since then they've come down to 6.76. So that's a 30 basis point drop in a matter of a month or 6 weeks or so. And I think that has kind of given a bit of a life to housing demand, at least in the early indications I'm seeing. Okay. Um, but a lot of times what happens is people kind of wait a little bit. So there might be a bit of a backlog for mortgage rates below, 7%. So or maybe like in some parts of the world, if you kind of do your research, if you kind of go to less reputable sources instead of going to like Wells Fargo, you might get like another quarter, half a point below the average. So maybe like 6.5 people are getting. But what happens if, let's say, the Fed comes out and says, we're going to hold on to rates higher for longer, another few months, and then mortgage rates tick back up to 7? That downfall in the purchasing activity could be sharper than expected. So like these are kind of early indications I'm keeping an eye on, and nothing too definitive. I'm guessing the same is true for the car market as well, at least on the used car market. And so anyway, something to keep an eye on. The mortgage rates have come down to all the way to 6.1, 6.0% in September 2024, and then they picked back up. So um, so then on the other hand, we're seeing credit card delinquencies and auto loan delinquencies rising. So these are kind of like a lot of this is why macroeconomics is so hard to forecast, is because there's a lot of moving parts acting on consumer spending at the same time. And then there's now the political headlines and everything. So all of this kind of plays in together. And I'm seeing some divergent stuff in data right now. So um, just kind of let you all know where I am with all that. All right. So that's eBay. Outlook's a little lower. Okay. We talked about Intel TSMC. Give me 1 second. One second. Okay. NVIDIA is down now more than 4%. If you want to understand why, look at the article at the top. Highly recommend reading the article at the top. The NVIDIA earnings was way worse than people realize. And I explained it in the article. It was worse than I expected with my $100 price target. And now I revised my target to $80. And the explanation is at the top of your screens. And please take a moment to like and repost that article. It's really important to kind of get some traction for it at the beginning as soon as it's published. And it was published only about an hour ago. So Tesla is down more than 1%. Tesla went, Lucia, you want to talk some Tesla? Tesla went down all the way to below 280, I think, in the morning. Let's see. The day's range is 280.91. Okay, 280.91. So it didn't go below 280, but it was kind of pushing 280. It was below yesterday's price. Where do you think we go here from here, Luce? I mean, the stock sold off so fast. So all these like near-term technical indicators are showing oversold. But the fact is the fundamentals of the company indicates $100 per share. So this might be a situation where the stock may stay at oversold for some time. Maybe there's a bounce back or something. Who knows? But I'm holding on to my short position for now. What do you think?
I don't believe technical analysis. I really don't. So, in my opinion, Tesla is just gonna go to the price it's worth, which is 100 or less.
What do you think about my thoughts on the used car market? Do you see a similar strengthening, or is this something that you don't watch at all?
No, I think definitely there might be a strength going forward there. That's why Carvana is doing decently, let's say. But I'm not so sure. What I'm sure of is that EVs are losing ground. But between used vehicles or ICE or hybrids, I don't know who the winners will be in the medium term.
Yeah, I think it's going to be very difficult for Tesla overcome this hybrid EREV extended range EV. wave. I don't think that's going to happen before robotaxis come about, like in like mass market, and I don't think that's going to happen before 2030. So I think Tesla stock is doomed for the near future. All right, Tesla filed application for California transportation permits. Um, the FAA may cancel $2.4 billion of contract with Verizon and instead give it to Starlink, owned by Elon Musk, per Washington Post. Man, there's a couple $100 million that he invested in Trump's reelection really paying off. Over 150 refresh Model Y spotted at Tesla's Fremont factory today, says Sawyer. Tesla's official filed an application seeking approval to offer ride-hailing service in California. Tesla applied for a transportation charter party carrier permit from the California Public Utilities Commission. That classification means Tesla would own and control the fleet of vehicles. Tesla is applying for the same type of permit used by Waymo, per Bloomberg. Chris,
What is your ETA for a Tesla profitable robotaxi network?
how big is the robotaxi network?
Just profitable. So, I mean, you know, that's a good question. I mean, multiple cities.
Multiple cities, give it a year. But the question is flawed. Like, that's not the question that matters. You could have said, when will Cybertruck reach profitability? And, I guess the correct answer looking back was Q3 2024. But it doesn't matter because in Q4, it went unprofitable. Rivian put up gross profits in Q4. That doesn't matter. Next quarter, they're going to be unprofitable again. So who gives a fuck? So the question you should be asking is, when will the robotaxi network generate more than $1 billion of profits, bottom line? And I don't think that's in the next 3 to 5 years.
Cool. Thanks for answering the question. I think I missed what you were talking about with the used car market. Was there I'm very interested in this because I have a short position in Carvana. So were you suggesting that the used car market is strengthening?
Yeah, there's a bit of a increase, or at least let's say the deterioration in the automotive market has slowed down, and maybe flat year over year right now is what I'm seeing. And before that, it was deteriorating. And I think this yields coming down, the 10-year yields, 5-year yields coming down from, 10-year coming down almost 5%. I think it was above 4.8. So now 4.3, that half a point drop is giving a bit of a life to housing market and the car automotive market. But this is very, very preliminary. This is early indications, like green shoots. It doesn't mean it's going to be surviving. The market, both of the markets have been in a coma, induced coma, since early 2022. So it's been 3 years. They've been on an induced coma. And now they're kind of trying to get it back out of the coma. And we're yet to find if the patient can survive on its own or not. And so that's what I'm saying. I think the coma, they like the doctor is in the ER, and the doctor's trying, or I guess ICU. The doctor's trying to potentially bring him out, bring the patient out of coma, and then we'll see what happens. Now, on the other hand, the virus is spreading. The disease of delinquent loans on the automotive market and the credit cards is increasing. So the disease is spreading at the same time. But we'll see. We'll see what happens if the patient's dead or not. I think the patient may. My guess is that my guess, but this is just a guess. Is I haven't yet seen even early indications of this because the credit spreads are still so fucking tight. Like triple C, triple B's credit spreads are just so tight. And my guess, though, I think 2025 will be marked by a rising unemployment rate, a decline in the stock market, and rise in delinquencies, and then defaults. So I think that's next. I don't think half a 0.5%, 50 basis point drop in yields will help that, or even 1%. But that's TBD. That's just my kind of gut feeling. It could also be biased because I have some short positions, Gut feeling. The best way to invest. Gut feeling analysis. All right. Let's continue on Tesla news. Sawyer says there are hackers posing as journalists from Wire, TechCrunch more than DMing ex-users about collaborating on an article. Do not respond to them. Click any links. Okay. Wes, a Tesla employee, says, thanks for the feedback. Or Cybershock guy, why does the Cybershock Mega Wiper leave streaks like this? Mine are equally bad right now. Wes says, thanks for the feedback. If you hold the wash button through 2 cycles, the wiper will not continue to soak your windshield, effectively doubling the amount of fluid dispensed. This helps with stubborn road salt when needed and maintains the quick cleaning functionality. You will see called out in the release notes. Let's see, it's going out OTA with 2025.2.8, which deployed to Wave 1 last night and will soon go on to the rest of the subject league. Okay. If you hold the wash button through 2 cycles, the wiper will now continue to soak your windshield, effectively doubling the amount of fluid dispensed. Okay. All right. Some, real-time customer support right there. SpaceX has received FAA approval for the 8th Starship test flight, currently scheduled for Monday, 5:30 p.m. Central Time. Okay. The Starlink terminals are being sent at no cost to the taxpayer on an emergency basis to restore air traffic control connectivity. Okay. Yeah, Elon seems very sensitive to any sort of news or rumors around him using his position to benefit his own companies. So we've seen this a handful of times now, that he's like immediately responds to any sort of rumors or news that kind of indicates his company is benefiting from his position at the government right now. Oli Express on new Model Y. After just a few miles, it becomes apparent that the chassis is now more balanced. It's more stable on the road and ride feels safer and smoother, especially when driving quickly on highways. The steering has also been revised. While it was previously too twitchy for many people, it's now more composed, yet still pleasantly direct, ensuring the driving experience is sufficiently sporty of a car of this type. The improved noise insulation boosts refinement and therefore comfort, where the old Model Y let insignificant windows at higher speeds, you're noticeably better isolated from the outside world in this new one. Overall, blah, 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 blah. Okay, so these are the same similar things that we got with the Model 3 Highland upgrade that didn't lead to an increase in sales. And in fact, sales continue to decline with the Model 3 upgrade. So it's going to be interesting to see how the new Model Y upgrade functions or kind of results in. It's just stunning to me how certain Troy is. I think there's an overconfidence there. I think how strong Model Y is going to be is still a bit TBD. I don't think, but he looks at way more data than I do. He has more experience, and his accuracy is much higher than mine in terms of forecasting production deliveries. That I'm more willing to believe his stance on this than mine. So you're still waiting for his VIN. Okay, so not much of a news on the Tesla front here. Grok voicemail is available to X Premium users. Okay. Tesla wins ruling to limit damages in U.S. lawsuit over autopilot crash. Tesla convinced a Florida appeals court on Wednesday to limit the damage it could be forced to pay in wrongful death lawsuit, accusing the company of misstating capabilities of its car's autopilot system. Okay. Let me see if any comments on YouTube or anything on X. There's some replies about NVIDIA. Okay. All right. I posted posted something yesterday that said Elon killed TSLA. Okay, so this post right here. This one went almost viral. It's like 80,000 views and counting still. 85,000, and more than 100 replies, and it shows a graph of 26%. The replies are pretty telling, I think. So if you look at the replies, Kyle Paul says, "I assume you think the whole market is killed by Elon as well, right?" But the whole market is at all-time highs. So I just don't think people really have their facts straight. I don't think people have their facts straight when it comes to Tesla or Nvidia, or just kind of markets in general. I think a lot of people are overinvested, and they're kind of replying with emotions rather than kind of thinking through what I'm trying to say or what I'm saying. But I'm seeing the same thing in Nvidia replies, article replies, and but on the other hand, there was an article on bullish bearish sentiment today that kind of caught my eye. So let me see here. AAII Investor Sentiment Survey. Okay. So this is something on market sentiment. There was a Seeking Alpha. Let me just see if I can find this. I clicked on it. I read it today, but it kind of things move so fucking fast. These art headlines. It's kind of hard to find it again after. Let me see. AAII. It said something like, okay, I can't find it, but I'm gonna have to kind of remember from the from my. It says something like investors have gotten really bearish, very bearish, and the only other time they were more bearish was back in Great Recession, and I think it said COVID. AI sentiment survey. Yeah, I can. Let's see. Okay, there we go. Today at 7 a.m. Bear sentiment jumps, knocking on the door of Great Recession levels. Okay, so let's see if my memory was correct. Bearish sentiment among individual levels surged to the highest level in 2.5 years this past week, as the tech and momentum trades showed some vulnerability. The American Association of Individual Investors said in a survey for the week ended February 26 that the bearish camp, those who think the market will be lower in the next 6 months, jumped to 60.6% from 40.5% the week before. So that's a massive jump. Okay. So first of all, I mean, the first take here is that this survey can be very volatile. First of all, it's a survey. Okay, it's a survey. It's not observed data. Secondly, it's very volatile from week to week. So it's not like initial weekly claims where it kind of changes gradually. I mean, that's still also volatile too, but when it changes direction, it kind of sticks with that direction. It's not like that with this survey. I think kind of things change really fast month over month, etc. But it says bulls fell to 19.4% from 29.2%. So from 29% to 19%. The spread between bulls and bears jumped to 41% in favor of the bears, up from 11%. So it's a very massive bearish sentiment in the last week that developed across markets. Okay. Now you look at that, and now you look at what SPY did in the last 5 days, down 3%. Well, in the last month, it's only down 1%. From the all-time high, it's down about 3%. So it took just 3% drop. It just, I mean, this bearish sentiment that they talk about in the survey resulted in a 3% drop. So it doesn't quite like, I don't quite, I can't make those two kind of match in my head. So I don't know. Yeah, I'm going to dig a little deeper into the survey, look at the kind of data collection methodology, and how many people they survey and all that stuff. I look at the variance if they share it. Let's continue with this quick take on this survey. Bearish sentiment hasn't been this high since September 2022, when the level hit 61%. So if I remember correctly, wasn't it the month after things bottomed? Let's see. Yeah. So October 2022 is when the market bottomed, when everybody was expecting a recession. And it says this is the most bearish since September 2022. So I think markets are bearish. I mean, markets have gotten bearish. Okay, investors have gotten a little skittish. The negative sentiment has increased, although the markets have dropped only 2, 3, 4%. S&P 500. Okay. We've also seen Tesla stock plunge. I mean, in the last month, Tesla down like 30%. From the peak, it's down like 40%. So it happens with Tesla stock sometimes. There's a lot of other indications that early technical indicators are like super stretched out. And then it says before that, you'd have to go to financial crisis to see bearish levels above 60%, with bearish sentiment hitting 70% in March 2009. So that's another bottom. So the spread of 41% to the bears hasn't been this high since it 43% in September 2020. Before that, it would be March 2009's 51%. The stock market has seen a recent stumble with the S&P 500 off 3% from its recent high, but still up 1.3% year to date. Nasdaq is off just 1.2%, and Dow is up 2% for the year. So the survey sentiment has gotten worse, but the price levels don't show that at all. So I find that really interesting. The bond market may hold a small clue to the pessimism. The 10-year Treasury yield has dropped from near 4.8% in January to close to 4.3%. Given inflation expectations rising, the drop in rates looks more like pessimism on growth, which could bring a U.S. recession back into the conversation, which I haven't seen anyone calling for a recession either. So everybody's bearish on the market, but no one's calling for a recession at this time, which I thought that's just the picture just doesn't make any fucking sense. The Conference Board's latest consumer confidence index dropped below 80, a level that typically signals a recession. But as investors saw with the inverted yield curve, these auspices are far from guarantees. And that's the end of it. And then I clicked on the survey. Let me just see if there's any sort of like how many people they asked kind of thing here. Investor sentiment is measured with a weekly survey conducted from Thursday midnight until Wednesday noon. Tracking sentiment gives investors a forward-looking perspective on the market instead of relying on historical data, which tends to result in hindsight bias. Market sentiment data compiled and depicted below for individual use, doing so since 1987. Okay. How would you describe the current state of the economy? Mixed, 55%. Good, 37%. Lousy, 7%. Sentiment survey pessimism launches is the headline. Okay. Bullish sentiment was last lower on March 16, 2023, and was among the lowest 65 readings in the survey's history. Amazing. Each week, we ask AII members a simple question. Do you feel the direction of the stock market over the next 6 months will be up, no change, or down? We refer to this question as the AII Sentiment Survey. Since we started polling our members in 1987, the AII Investor Sentiment Survey has provided insight into the moods of individual investors. The sentiment survey has become a widely followed measure. Its results are circulated by various organizations and media outlets, including Barron's and Bloomberg. Conducted each week from Thursday midnight to Wednesday noon. Participate by voting in the survey. Open to all members, though a weekly email sent to a rotating group of members reminding them to participate. Interesting. Results are automatically tabulated by the database, published online early each Thursday morning. Sentiment survey provides investors with a way to avoid hindsight bias. Hindsight bias occurs when a person believes the outcome of a future event is predictable by studying the past. Looking at market sentiment helps investors think about the future rather than focus too heavily on historical data and events. Okay. Just kind of skimming through the rest. There's a lot here. Okay. It doesn't say how many people respond to the survey, which is interesting. Like, how many people generally respond to the survey? Nothing on that. Like, you would at least say fucking the sample size or something. Let me just see. How many people respond to the AII survey? 200 to 500 responses per week. I mean, that explains why it's so volatile. That's not very many responses. Varies depending on market conditions and member engagement. While not a large sample, the survey provides a snapshot of individual investor sentiment, which main traders and analysts track for the market sentiment trends. Yeah, I mean, that's why they're not saying it. It's only a couple hundred people respond. And okay, and then the other thing I want to see is how many members does the AIA have? 150,000 members. So out of 150,000 people, only a couple hundred respond. So we're talking like not even 1%, more like 0.1%, 0.2% response. So that's not, I mean, I don't know. Maybe I'm just kind of like trying to justify this away right now. But I'm gonna look into this. Let me just take a quick note. Okay. Maybe I'm just trying to justify it away. It doesn't fit my narrative here. No change on the FSC tracker. Still 97.4% of drivers with no critical disengagement. That's far away from being robotaxi, I think. Okay. Also, let's look at. So I guess Tesla applied for a permit in California. When did Waymo apply for an autonomous fleet permit in California? April 2018. So by that measure, it's a very limited measure. Tesla's behind about 7 years. Okay. All right. The other thing I want to do is inflation forecasts are still very high. Quarterly analyzed percentage change for Q1 2025, CPI 3.9%, core CPI 3.9%, PCE 3%, core PCE 2.9% updated today. This is a forecast. So 3% quarterly analyzed percentage range. February 2025 is expected to be a little lower. Inflation year-over-year percent change. CPI 2.8, core CPI 3.2, PCE 2.4, core PCE 2.6. So it's still about 50 basis points to maybe a full percent higher than where the Fed wants it. Okay. Yeah, so that's that. Tesla stock is down 2.4%, testing the lows of the day. Nvidia down 6%. Yes, okay. All right, I'm gonna go and pump my chest a little bit. And if you guys could please like and repost the article at the top on your way out, I would highly appreciate it. It really helps me out to get a lot of traction into articles earlier on because it kind of puts them into their radar to kind of market a little bit more. So I would highly appreciate your assistance in liking and reposting these Seeking Alpha articles and sharing that with others as well. Thank you. And if there are no further questions, requests to speak, and I will chat with you all tomorrow. Take care.